meant to just hear effects. I promised to drop the video recording of our previous class, which I'm trying to drop it now. So currently I'm making um, a video concerning the Fibonacci retracement. Hope everyone can hear me. So in this video now, I'll be showing you how to identify your POI using your Fibonacci retracement, and where your SL is meant to be, and where your take profit is also meant to be, and also how to use your Fibonacci re- retracement to get sniper moves. So, and when it works and when it does not work. So stay tuned and you will learn something in this video. So let's jump in. So in this chart now, before you start before you start using your Fibonacci retracement, there must be a break of structure showing that the market is trending, whether uptrend or downtrend. So this Fibonacci, it works every time, but when market is ranging, avoid trading, no matter what strategy you are using. In a ranging market, we always warn you. So to avoid being played at or played with, avoid the ranging market. So currently here um, we have break of structures here saying that price is bullish. So here saying that price is bullish, and what do you do since price is bullish? You'll be looking forward to buy opportunities for buys opportunities. So you don't just jump in and start buying. You need to know where price is coming from and where price is getting at before going to your direction, which is buying. You understand? So in this case now, we use our Fibonacci retracement to get our POI and then wait for the next move. So currently here, this is a break of structure and price already has come to a POI here. So for me, I will not use this for my analysis because the POI has been tapped already. Immediately price came to the POI and tapped. So currently I'll be using this as my break of structure because price is not close to a POI here. This is our POI. So here use a Fibonacci retracement from the high that was broken, which is break of structure, down to the origin that caused the break of structure, which is that place my Fibonacci retracement is resting, that low. So once you get it, you highlight to your left side. So for example, for whatever, once you are looking for buy positions, your concentration shouldn't be on the premium level because here is for where sellers should be looking forward to sell from after a lower low has been broken, or after a change of character from uptrend to downtrend. And if you're looking for a sell, you should be looking forward to sell from the premium level. But once you're looking forward to buy, you should be looking forward to buy from a discount level, which is from here down to this place. You understand? So once price is above here, it's not your business. You should wait for price to come here, no matter how long it takes you. The thing is for you to know what you are doing. So at this place now, POI here, from here to here is where we'll be looking for a POI because not because that you now know that you are supposed to start buying from here. Start looking for buy opportunities from here to here. You come and set your long position here and take profit up there. Then stop loss here. It's a good thing, but your risk to reward will not be okay. Because at the end of the day, you are risking 146 pips, which is too much. So for you to avoid this kind of risk to reward, you need to get a POI, that's point of interest, where we are expecting price to come to and react for buying. So currently, because I said this strategy as for buying opportunities should be from your discount level, 50% discount level, below it down, not from your premium level. So inside this 50% discount level, we got our POI from here. So how do we get the POI? Is from an order block. What is an order block? We have two types of order block: a bullish order block and a bearish order block. So what is a bearish order block? A bearish order block is the last bullish candlestick before a bearish move. So here we have a bearish order block here. This is the last bullish candlestick before this bearish move here. So a bullish order block is the last bearish candlestick before a bullish run. So since here is our break of structure and here is origin, and we are looking for a POI, and our POI is an order block. So here, where is an order block in this place now from this 50% discount level? So we have this as an order block here in a higher time frame. So it's been highlighted here, showing us that this is where we should wait for price. So whatever price is going to be doing here will be an inducement or liquidity. That price will still come and take out. So let's highlight this with a horizontal line so that once price gave us whatever it gave us, we see that price later took this out, so it has already been highlighted. So we still see that price will still take it out in the future. So for our POI, we use our rectangle to keep highlighting it and see how price reacted to it. And also, I'll be showing you guys how to use your Excel and take profit in this setup. So as you can see, it was not too long. This man here, that this guy here, that most traders will use as their POI, has been taken out at this point. So price has already used it as liquidity. You understand? Then our POI, let's see what price did at our POI. So price tapped on our POI. So since we have already gotten our POI, we already know that the premium level is a bad news for buyers. If you're looking for buy opportunities on an uptrend, premium level here from here to here is our premium level is bad news for you. Where I should be looking at for is from here to here. So this is a pure example of what I'm just saying. So once you've already gotten your POI and whatever, delete your Fibonacci retracement to be seeing the chart clearly. Because the Fibonacci has done its work already. So here now, let's say when price came to your POI, you are still doubting the move. You wait for price to do what? Give you a break of structure. Yeah, you can still see the break of structure in this higher time frame, or you can still catch it on a lower time frame. Any one you choose to, but there must be a break of structure if you are still doubting this. Once there is a break of structure, you do the same thing. Use your Fibonacci retracement from that high, from the break of structure to the origin of the break of structure. You understand? And I light the whole thing. Do you understand? So doing this now, like you can see, this place now is too cozy. Like it's not that clear. So you go down to a lower time frame, maybe 1 hour, 30 minutes, 15 minutes. Let's just use 1 hour. But I normally go down to 5 minutes. But if I use 5 minutes to get this particular place we are, will be somehow hard. This for the video, so you know what you are doing once you start trading. So here now is our 1 hour time frame. So our break of structure and to identify our POI. So like I said, whatever you are doing for buy opportunities, here your premium level is bad news for you. So what you're looking out for is from here. Your discount level is where you're looking at to buy. And I said you don't just put your buy entries here and here and then your SL here. Then your take profit. God knows where you want it to be. So I'll still show us all these things and we understand what we are doing in the market. So, so since you're already getting our origin of our break of structure, what you should looking out for is an order block in your discount level because we're looking forward to buy. So imagine, so you know that we already gotten the our entry on the higher time frame. So this is our POI on the higher time frame, which price already tapped into. So, but for you to get a sniper move and also to be sure that price is going in your direction, you should that thing you look at for in the higher time frame, which is break of structure, the trend of the market, your POI, blah blah blah, is what you are still going to look at for the lower time frame, which we have already gotten our break of structure. Use our Fibonacci to get the original break of structure. Know our discount level from here down to here. Know that here is bad news. That whatever is happening here will be liquidity that price is still going to take out and come to our POI. So you understand all these things. You highlight your POI to the right and wait for price to come to your POI. So as you can see, after the whole thing, price still came took these things out as liquidity. But before price came to appear, price created another liquidity, another inducement. So this is what price normally do. It normally creates a inducement very close to POIs. Why? Because it needs to trap in buyers so that it will have more energy to go to your direction. So having more energy is once these buyers are taken out and the orders that are here are taken out, price will not have a momentum. As you can see how the price took it out to avoid maybe the person increase his or her stop loss will be below here. Price came with full force. Take this thing out without hesitating. So imagine you entered here and you are scared that price not come to your POI. When I enter here, you will be in drawdown after price have done this. So I know if you enter here, your SL will still be below here. So, but when price is not at your POI, don't panic. Allow price to give you a break of structure. You understand? If it's confusion, close your chart, sleep. Don't enter a confusing trade. You still hit SL. So, as I was saying, price is our POI at that level in lower time frame, and you see what happened. Take profit. So I'm going to shrink this a little bit for us to see how many pips we got and what the higher time frame gave us also. So we are going to use the higher time frame entry model and lower time frame entry model and see what we are risking. So on the higher time frame, okay, let's go to higher time frame, forward time frame first. On the higher time frame, we'll be risking because you enter from where price hit. So your buy limit is here. This is for entry and exit. Like I said, your exit you should be your exit is at the previous high. Don't target the almighty high or almighty low if you are selling the all high or the all time lows if you are selling. If you are buying, don't target the all time high. Your target first should be the first or the previous high before your POI. You understand because price normally has a funny way to come to the previous high, take it out or grab it and still go back to your entry. So for you to avoid all these things, your target should be at the previous high. Then your stop loss should be immediately below your POI. So what are you risking? You're risking which you want to uh, so we are risking here if you want to. So I want to adjust the SL. Mm-hmm. So here we are risking 58 pips. Yeah, 58 pips. That's which we are doing which you want to 8. We are risking 58 pips to get 482 pips, which is not bad. So at the end of the day, price hit our take profit. Like I said, price has a funny way of hitting the previous high and coming down to your entry. Something happened there. So like I say, immediately you get your POI and everything, delete your Fibonacci retracement to be seeing what price is doing clearly. So our higher time frame gave us this, which we want to 8. Then let's see what our lower time frame is going to give us for you to know the difference. So you should know the one you should be using. So this is our lower time frame entry. We enter, target the same high, your SL immediately below. You see the SL now is now adjusted not to this zone. So currently here you should be risking about you're now risking what's happening. Okay. Sorry about that. So currently in the lower time frame you're just risking 32 pips to get risking 32 pips to get 460 pips. You can still go to this, bro. Let's use this high. Let's not go. Let's not do unrealistic cash here. So as you can see, what does it tell you that the lower time frame is more affordable than the higher time frame? The entry. So if you miss the higher time frame, don't panic. Price will still come back to your lower time frame POI for you to cash a good sniper and good risk to reward. So for those who are doing what you want to trade, you will still get your what you want to trade here perfectly and easily. So the lower time frame give us ratio 1 to 14, almost double of what the higher time frame is giving us. You understand? If I say let me increase this thing more to give us ratio 1 to 16, which is double of what the higher time frame is giving us. You understand? So with this move now, if you're entering here with one loss size in lower time frame, you should be risking only 200 and 300 and if you're entering in lower time frame, you're risking only $330. So if you're risking on the higher time frame, you're risking like $580 because the higher time frame is giving us 58 pips, lower time frame is giving us 33 pips. Then our target is 460 pips on the lower time frame, 477 pips on the lower time frame, and the higher time frame is giving us 482 pips. So that means you'll be risking 550, 580 pips to get $4,820. But here in the lower time frame, you can get more because it will allow you to open almost let's say 5 positions, 10 positions, maybe with 1K account size. You can be getting up to $50,000 with this particular setup without panicking. So if you are still scared of the market, what you should be doing is always use your Fibonacci retracement after you break construction. So price was still going up. It created another break of structure here. What do? You get to the origin that caused it, which this low is still the origin where you should really be targeting the POI. So you still drag to this level. You understand? You see, price later gave us an entry there. So there's nothing to panic about. If you still miss this one, you will catch this one too. So you don't panic once you miss the setup. So this thing now I did here for buying is the same thing you do for when you are selling. I might be dropping this scenario maybe before the end of this week, but just learn about the buy first. It's the same thing, the opposite way for selling. So whatever you are looking forward in the higher time frame with your Fibonacci retracement is is still the same thing you're going to do on a lower time frame. There's no difference. The only difference is you will now get a better risk to reward on the lower time frame than the higher time frame like this here. You get a better risk to reward like this here, which 1 to 14. The higher time frame 4 hours is giving which 1 to 8. You understand? So that's the difference. And you can use your 1 hour. You can even go down to 5 minutes time frame. You can still get something lower than this. You can even use like two pips for your entry in lower time frame, 5 minutes. So whatever you're doing here, if you still go down to lower time frame and get your entry. You understand? So it's not that hard or difficult. So thank you for your time. I believe you understand and learn something from this video. Remember, for this thing to work, there must be a break of structure. After the break of structure, you you already know the trend of the market. You use your Fibonacci retracement to identify and get your POIs. Once you're already getting your POI, delete your Fibonacci retracement from your screen and see the chart clearly. Then wait for price to come to your POI. But before price comes to your POI, there must be an inducement liquidity, which this is liquidity. This is another topic on its own. This also is our own liquidities. You understand? This one can be a travel. Okay, this is now our POI. And price is now creating this thing before this POI. That means price will come here and tap and go to the next. So once the previous break of threshold was not used, the POI is not used, know that the recent break of threshold, the recent one will be used as inducement. You understand? Before price can come to your POI, there must be an inducement to confirm your POI. Without the inducement or liquidity, like we are seeing here, the POI will be liquidated. So I might be doing a scenario where the POI got liquidated and also the sales scenario later on. So or later, yeah. Enjoy your morning. Thank you for your time. God bless.